Welcome back, students who are taking financial accounting, and in this series of videos we are working on the assigned homework problems from the digital study guide for chapter 10, the short exercises. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help you if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. So we're picking up where we left off, and I think in this video I'm going to end up doing 10.4 and 10.5, right? Because as I just glanced at this looks like a relatively short one. So Buckeye reported the following on the balance sheet at December 31st. So we have common stock, 400,000 shares issued and outstanding, paid in capital in excess of par, and retained earnings. So assume Buckeye issued all of its stock during 2014 in one transaction. Okay, so that's in one journalize the company's issuance of the stock for cash, right? So to journalize it, so we're journalizing the issuance of the stock for cash. So we have, okay, let's start out with cash. So I'm going to get cash, so I'm going to debit my cash. Now the question is how much cash am I getting? Okay, well, they're issuing the 400,000 shares, so that's 1,200,000. Okay, and we had paid in capital in excess of par of 425. So that's 1,625,000. Right, so we're going to debit our cash for 1,625,000. Right, and of course we're putting the common stock on the books, so that's 1,200,000. And we're going to credit our paid in capital in excess of par. Right, and again, I'm not writing all of this out because I'm treating it as if I'm doing homework. That isn't going to be turned in, so that's $425,000 for the paid in capital. So that would be the journal entry to issue the stock. Now it says, was Buckeye's main source of stockholders' equity paid in capital or profitable operations, and how can you tell? Okay, so we're talking about the main source of the equity. Well, what do we have here? We have the main source of equity being the paid in capital, right, in excess of par of 425, be it our retained earnings is far greater, right? So the answer to this would be the retained earnings obviously is a greater number, so that's where the main source of the stockholders' equity came from. Okay, because remember, looking at stock, this is my total equity, right? Is whatever these three add up to be. So as proportionate, the common stock is not adding anything to your equity if we, when we go to sell it. All right, so we're only concerning ourselves with what we get above it, and that's the, as the paid in capital in excess of par. So that's 425. If when we had a profit or loss, right? Remember, we close that out to retained earnings, right? So in closing it out to the retained earnings, the 2,640,000 is much greater than that paid in capital. All right, simple. Right, 10.5. It says here, at December 31st, Sugarland Company reported the following on its comparative balance sheet, which included 2013 amounts for comparison, adapted with all amounts in millions except for par value per share. All right, so remember, we're looking at these in millions, but we don't need to concern ourselves with those amounts being in millions. So how did Sugarland Company's total paid-in capital increase during 2014, and what caused total paid-in capital to increase, and how can you tell? Right. So let's see here. All right. So how much did Sugarland Company's total paid-in capital increase during 2014? And what caused total paid-in capital to increase, and how can you tell? Excuse me. Okay. On the surface, if you read that question, let me actually move this slide here just for 1 second. Let me move this because I want space over here. Okay. Okay, on the surface, if you read this and it says, and this is where the idea of understanding the totality of the concept and seeing the pieces that you need from the totality in order to figure out what it is. And this is a prime example of this. Okay. If we read the question, it says, how much did Sugarland Company's total paid-in capital increase during 2014? What most people will do is they'll come over here and they'll look at the paid-in capital of excess of par, and they'll go, okay, it was $362,000 for 2013, and they'll say we have $395,500 for 2014, and the difference between the two is $33,500, and they'll say that is the total increase during 2014. And if they do that, they're wrong. Okay, and the reason why they're wrong is because they're not looking at the difference in the common stock. Okay, you have to consider that. We have an additional. We started out with 897,750 in 2013, and we increased to 900,000 in 2014, which is an additional $2,250. Okay, so the increase in the paid-in capital ends up actually being the $33,500 plus the $2,250 for a total of $35,750. Okay, so that's the total increase in the paid-in capital during that time, during 2014. Now it says, what caused the total paid-in capital to increase, and how can you tell? Well, obviously they must have issued common stock during the course of 2014 because there was an increase in the common stock and the paid-in capital in excess of par. Okay, and also so also you can see over here that the number of shares was 399,000 and it increased to 400,000. Okay, so there was an additional 1,000 shares that were sold during 2014. Right, so that's how you can tell why there was an increase in the total paid-in capital. Right, now the next question says, did Sugarland Company have a profit or loss for 2014, and how can you tell? Well, let's think about the profit and loss. Okay, but before I go there, when we're looking at the equity section of the balance sheet, okay, as a framework on how to think about the equity section, we have stock, right? Whether it's common or preferred or treasury, right? And then you also have retained earnings. Okay. Now, what feeds retained earnings? On our income statement, we have our revenues less our expenses, gives us a profit or loss in a simplistic form. Okay, that profit or loss is closed out to our retained earnings. So that feeds the retained earnings. But once that money's in the retained earnings, then we think in terms of dividends. Okay, and dividends, because of the shares of stock, are taken out of retained earnings. Okay, so due to that, we take out of retained earnings to pay our dividends. Okay, and that's what gives us our ending retained earnings. Okay, so you start the accounting period with a certain amount, a beginning retained earning. Then you add in your net income. I'm just going to, or you take into consideration your profit or loss. Then you subtract out your dividends, and when you do that, that gives you your ending retained earnings. Ending retained earnings. Okay, so that's how you have to think about it. So it says here, did Sugarland's company have a profit or loss in 2014, and how can you tell? Well, let's look at our retained earnings. In doing the math, we have in 2013 we have 2,175,000, and we have 2,400,000, and so our retained earnings increased by 225,000. So that was an increase, okay? And that increase in our retained earnings came after, remember, beginning was 2,175, okay? Ending is 2,4, okay? And in between we have our profit or loss and our dividends. Those are the two things that are going to affect the difference between those two numbers. Okay, so did we have a profit or loss? Yeah, we had a profit, all right, but the profit, we don't know how much that profit is because we don't know how much the amount of the dividend was, right? If we were told, if there was a line item or some information here telling us that whatever the amount of the dividend was, then we can figure out, let's just say, since we have, I'll just throw in a fictitious number here. Okay, let's say dividends paid out were $75,000. Okay, well, three of the pieces, you can always figure out the fourth, right? So if we had dividends of 75,000, we would add that back into this figure of 25,000, and we'd end up with $300,000 in profit, right? Okay. So again, remember, this here is the idea of the totality of a concept and taking the bits and pieces that you need that fit within the totality of the concept in order to figure out whatever it is that you need to figure out. Okay. All right. So hopefully you understood that and you see the theory behind it. And if not, go back and go back and watch the theory videos, but realize that this here idea here, let me get a green here. This idea here is something you've already been exposed to, at the beginning of the textbook. Okay, so I'm just repeating that concept. I'm not, you're not going to quote unquote see that as much in this chapter, but you do need to remember, I had said accounting is understanding the concepts, and the concepts build one upon the other. And as you go through the textbook, it's not going to keep on rehashing old stuff, right? I happen to do that right at this, at this point in time, just to make the point here that you take whatever information you have, and if you understand the totality of the concept, you can take those bits and pieces of information, plug them in, work them, manipulate them in order to arrive at whatever it is that you want to arrive at. Okay, so with that said, if you still don't understand something, feel free to contact an instructor, and see you in the next video.